All right, welcome to The Explainer. Today we are diving deep into the future of your wallet. Seriously, 7 of the world's most powerful central banks just dropped a major report that lays out a roadmap for a new kind of digital money, and, it could change pretty much everything.
So just how big of a deal is this? Well, get this. A recent survey found that a staggering 80% of the world's central banks are already deep into researching or even building this stuff. So yeah, this isn't some fringe idea. This is a coordinated global shift in how we think about money itself.
So what's with the sudden urgency? Well, it's because the way we pay is already in the middle of a massive revolution, right? We're using less and less cash, and digital payments on our phones have become totally second nature. This has all the central banks asking a really fundamental question. What's our job in this new digital world?
The answer they're all exploring is something called a CBDC. That stands for Central Bank Digital Currency. Okay, now this is where it gets really interesting. See the money in your bank account right now? That's technically a promise, an IOU from a private company, your bank. A CBDC, though, would be a direct claim on the central bank itself. The best way to think about it is like a digital banknote. It carries all the safety and trust of physical cash, but in a purely digital form.
This slide right here really gets to the heart of it. The money in your banking app today is a liability of your commercial bank. A CBDC would be a direct liability of the nation's central bank. So in theory, it would be the absolute safest form of digital money you could possibly hold.
And the central banks are being super clear on this point. They're drawing a very sharp line in the sand. You've probably heard about stablecoins from private tech companies. The report says, look, even if those are backed one-to-one by central bank funds, they're not the real deal. A true CBDC means you hold the claim directly, with absolutely no middleman.
Okay, so we know what it is, but why? Why go to all this trouble? What's the actual problem they're trying to solve here?
What's really crucial here is that they insist this is not about replacing cash. It's about evolving their public service mission for a world that's already gone digital. They want to guarantee that every single person has access to safe, public money, build a more robust payment system, and hopefully spark some new innovation and competition.
So how in the world do you build something this huge without, breaking the entire financial system? Well, they've started by agreeing on a set of foundational principles, a rule book, if you will.
These are the 3 core safety rules. First and foremost, a Hippocratic oath for money: do no harm. Don't blow up the existing system. Second, a CBDC has to coexist with cash and the money in private banks. It can't replace them. And third, it actually has to make things better for everybody. It has to be an improvement.
And this chart kind of breaks down the practical stuff. For a CBDC to actually work, it would need to be as easy as tapping your card, totally hacker-proof, always on, we're talking 24/7, 365, and basically free for you and me to use for everyday payments. That is a really high bar to clear.
But, creating a CBDC isn't just a technical puzzle. It's a whole series of really complex policy decisions packed with significant risks. It forces some incredibly tough choices. This is probably the single biggest fear keeping policymakers up at night. A bank run, of course, is what happens when people lose faith in their banks and everybody tries to pull their money out all at once. Now, imagine a moment of real financial panic. Right now, there's a physical limit to how fast a bank run can happen. But with a CBDC, everyone could flee from their private banks to the ultimate safety of the central bank with just a few taps on their phone. An entire bank could literally be drained in minutes. That could destabilize the entire system. So to stop that nightmare scenario, they're already designing safety features. For example, they might cap the amount of digital currency you can hold in your wallet. Or they could get creative with things like tiered interest rates, where large balances earn 0 interest, basically nudging you to keep most of your savings in the commercial banking system. They're building in speed bumps from the start.
And pretty much every single design choice here involves a really tough trade-off. The biggest one, privacy. How do you create a digital currency that feels as private as cash while also following all the laws designed to stop money laundering? Anonymity versus security. Or what about convenience? How do you let people make payments offline, like if the power goes out, without opening up a huge door for new kinds of fraud? Honestly, there are no easy answers to any of these questions.
So if there's one key thing to take away from all this, it's this. Nobody is rushing into anything. This is an exploration, not a race. All these central banks are working together, debating every little detail, because the focus is on getting this right, not just getting it done fast.
And that leaves us with the central challenge that policymakers are wrestling with right now. How do you build a new form of money that's super convenient for all of us to use, but that's also fundamentally safe for the entire financial system? It's a massive balancing act, and the decisions they make over the next few years will literally shape the future of what's in your wallet.